Welcome to Finance Hub. Today I'm going to explain how companies raise money and how ordinary people like us can actually own a piece of them. That's the world of stocks, one of the most powerful wealth-building tools in history. What are stocks? Think of a company like a pizza. When it wants to raise money, it cuts itself into slices called shares. If you buy one share, you own a slice of that company. That slice is what we call a stock. The birth of stock markets. The idea of stocks isn't new. The first stock exchange was born in Amsterdam in the early 1600s, when the Dutch East India Company sold shares to fund voyages. Investors who bought those shares received a part of the profits when the ships returned with goods. Modern stock markets today, stock markets are global. From Wall Street in New York to the Bombay Stock Exchange in Mumbai, they act like supermarkets for shares, where buyers and sellers trade ownership in companies every second. How stocks make you money. Owning stocks can reward you in two main ways. First, when the company grows, its stock price can rise, letting you sell your shares at a profit. Second, some companies share their profits directly with investors through dividends. Why people invest in stocks? Unlike keeping money in a savings account, stocks offer higher potential returns over time. That's why millions invest in them, to grow wealth, beat inflation, and even build retirement funds. The risk factor. But stocks aren't risk-free. Prices can rise and fall daily, sometimes sharply. That's why smart investors focus on long-term growth, research, and diversification instead of quick speculation. Closing message in simple terms: the stock market is a place where ownership meets opportunity. If you learn the basics and invest wisely, it can become one of the best tools to build financial freedom. If you enjoyed this video and want to learn more about money and investing, don't forget to like, share, and subscribe for more.